Okay, welcome in. So I thought it'd be a great day to show you guys something that's kind of cool, right? So if you buy a stock, people think, well, if it goes up, I make money, and if it goes down, I lose money. Okay, but that's not the only way to make money in the stock market. So I just wanted to show you guys today, as we are building out a new portfolio, how you can kind of make money regardless of market direction. Now, it doesn't mean that there are no risk, but it is because of the risk involved that everybody doesn't do it. And so that's why we can do it and make money, which is really, really cool. So you see the S&P 500 today. These are the S&P 500 futures /ES. These are called the E-minis. The market's down 1.21%, right? So you would think, oh man, my Apple stock is down and my Tesla stock is down, and who cares? You know, I don't buy or trade individual stocks. Now I have, but my new rule is I don't do it. I just don't do it. I don't think you have to. So I primarily invest in the S&P 500. And you would probably say to yourself, if I'm invested in the S&P 500, Bobby, you're probably losing money today. And I would say, no, actually not. Look, the S&P 500 is down 1%, and I'm up $78 in that account. We're up $123 in this account. We're up $286 in this account. Well, how can that be? So I just wanted to show everybody, to let you know that there's different ways of skinning this market cat, right? There are different ways of doing it. And I was joking with my Discord group earlier that apparently you can trade this if you're drunk, narcotics abuser, alcoholic, doesn't matter, because I was getting my wisdom teeth taken out, and I traded in 3 accounts yesterday and don't even remember doing it. So I have no idea, but apparently, looking at what I did, I executed it flawlessly. I just don't remember doing it. And I don't remember getting into the Uber to take me back to the hotel. There's a lot of things I don't remember, but apparently I was doing some pretty cool stuff yesterday while I was, on the silly sauce yesterday. So nonetheless, let's talk about, what'd you say, Beth? Beth, stifle yourself. You will stifle yourself now, lady. I forgot to pick up my son's birthday cake today, so she's giving me grief about it. All right. So, nonetheless, let's build out a new account. Which is what we've been doing. So, we're building out an account to do the same thing that this account is doing. So, this year in this account, we started out for $27,000. We've made some transfers over to it, right? So I made some additional transfers over to it. But as of this morning, this account was at $36,542. We have made $2,688.15. We are up 9.65% compared with the stock market, S&P 500, being up only, I'm getting the latest data, 3.88%. So the stock market is up 3.88%. I'm up 9.65%. Now, do I always outperform the market? No. If you'll recall, for the month of January, the stock market was up like, 8% or something? And we were trudging down at about 3.41%. We did 2.37% in February, and we are on track for a good March as well. So I now have a 5-month winning streak in this particular account. So 5 consecutive months we've been going up, and it really doesn't matter whether the market is up or whether the market is down. So let's talk about constructing the portfolio. This will be really, really, really cool. So what we did is, and this is my spreadsheet, and I will share it with all of you guys in my Alabama class if you'd like it, not knowing that if you'll ever use it or not, but this is an options trading spreadsheet that I have worked on, I would say, for 10 years or more. It is the culmination of a lot of YouTube videos. I know nothing about Excel, but I have watched every YouTube video on the planet to figure out how to work this thing. So it works very well, and I use it to record my trades and to keep up with how I'm doing compared to the S&P 500. So we decided to start another account. So let's close this account. I've done enough bragging for the moment. Don't want everybody to think that I'm just bragging, because I certainly lose money and lose it often. So this is a Roth IRA. What's the good thing about a Roth IRA, Shannon?
The taxes
Yeah.
or tax deferment. So
So I can make all kind of money in this account and never have to worry about paying taxes on it until I take this money out, right? When I'm old. I'm 52 now, so I'm so young. I'll probably take this out in 40 years or so when I'm 92. So we got a little Roth IRA. We transferred a little bit of money in for the purpose of starting an options account. Now, the fact that this is an IRA does not bar you from doing the same thing that I'm doing in a regular account. Now, if you're trading an account that may be $5,000 or $10,000, you may not can do as much and trade as often as I do, but I just wanted to show you kind of what we do. And then this is my net lick, and I try to record it every day. Since I was at the dentist yesterday, I did not record this one. So let's see how we're doing today. I think this one is early, so we're maybe down a little bit. We haven't got this as an established account yet. So today's 3/7/23. And I go and I see what my net lick is for the day. And our net licky is, where's my net lick? Count info. Here we go. Net lick. We are at, oh, wrong count, Bob. Get the right one. I got too many counts. Let's see this one. So this one is at 26,186. 26,186.40. 26,186.40. So we are up $11.66 today. And since we started this account on the 27th, we're up $74.14. Now, excuse me while I do a little victory lap and play.
Well, we're moving on now. We're moving on up to the side. To a deluxe apartment in the sky.
So for those of you in the Alabama class, you don't even know what that is. That's the theme song to a 70s show called The Jeffersons, moving on up to the east side. So I always take a little victory lap anytime that our account is up. So we're up in the market by 0.28%. Let's see how we're doing compared to the S&P 500. We're up 0.028% while the market is down 0.18%. Now we're just getting our legs under us. This is a brand new account, okay? So what I do, and for those of you that watched my interview with Tom Sosnoff, not the one we did last week, but where he was interviewing me, I was telling Tom what I did, and I want to show y'all what I do so that some of that crazy vernacular that we use will kind of make a little sense to you, okay? So the way that I measure my account is through the Greeks and ratios. So everything that I do is based on VIX. VIX is a measure of the volatility of the S&P 500 over the next 30 days. If things are volatile, the VIX is really high. If things become less volatile, things kind of calm down a little bit, the VIX goes low. So let's show you what the VIX is for the day. So VIX is a measure of volatility. And normally when the market is down, as it is today, the VIX goes up. So our VIX is at 19.31. If I show you a chart of the VIX, this is a daily chart of the VIX. It's just kind of been going up and down and up and down and up and down and up and down. And the historical average of the VIX is somewhere around 17 or 18. So we're at 19. So things are a little bit volatile, but not as volatile as they have been in the past days. What causes the volatility to move? It's complicated, but really this goes up when people start buying puts in the S&P 500. Isabel, if someone buys a put in the S&P 500, buying a put, is that bearish? Do they think the market's going to go down, or do they think the market's going to go up? Buying a put.
It's bearish.
It is bearish. Look at you. I'm very proud. So it's very bearish. So when people start buying puts, it makes volatility go up. That's just kind of a quick and easy answer to tell you what VIX is. It's a measure of people thinking that the market is going to go up. So I put in VIX here, and VIX runs the entire show of what I do. Let's see if I can find this real quick. Let's see, desktop trading plan. Here's my latest trading plan. So let's whip out the latest trading plan. just to show you, and I'll give you guys a copy of this too, if you'd like to see it. This is a multi-million-dollar document, in my opinion. I could publish this in the Wall Street Journal. People should pay us big money for this because my trading group and I, this is not my device of its own, but this is a trading plan that has been developed by years and years of research with people contributing in our group. So I don't want you to think that I came up with all this and this is Bobby's enormous plan to take over the financial world, but it sure is darn good, y'all. It's really good. What the crap is that? What's that whited out there? Anyway, here's my trading plan, and the metrics that I go by are delta. Delta represents the, I don't know why I'm saying that. Hold on a second. Let me go at my thing. Let me get the word version of it. Desktop, trading, and trading plan. Let's get the word version so we can see what that says. Since I don't remember what it says. Here we go. Word version of the trading plan. Okay, here's Sweet Bobby's trading plan. So let's make this big. So the trading strategy is composed of two primary components, naked puts. Some of you have said, Bobby, what does naked mean? I'll show you what that means, and a put debit spread. So those things together. And then I run the entire portfolio by portfolio metrics. Now, when you guys drive an automobile, you probably don't know about the inner workings of an engine. All I know is how to put gas in it. I couldn't change the oil if I had to, but I know how to keep gas in the car. And I know because I look at a fuel gauge. I sometimes look at my, what is it called, a tachometer or whatever, to show how many RPMs that I have. And I look at the speed gauge, right? So there's three gauges that I'm looking at. Don't run out of gas, don't overheat the engine, and look at your speed. So I use three metrics to run my portfolio. So delta represents the directional risk of the portfolio. And I beta weight my deltas to SPY. So if I have positive deltas, that means that my overall portfolio is bullish. If I have negative deltas, that means that I am negative. And what that means is this: if my deltas in my account, let's go look at the new little account here. Let me show you. Here it is. Let's pull up the new account. My delta is 12.26. Shannon, you'll like this. This means that all of the options positions in my portfolio, you see several options positions that I have here. It is the equivalent of me having 12 shares of SPY. So if SPY is currently trading for $400 a share, it's like my little portfolio here is holding 12 shares of SPY, even though I don't have SPY in the account, because I have beta weighted it or correlated it to SPY. Now, another thing that delta tells me is this: for each point that SPY increases, so let's say that SPY is up $1, my account should be up the equivalent of me having 12 shares of SPY, which would be $12.26. If SPY goes down $1 and I have positive deltas, I should lose $12.28. You may have to watch this over and over till that comes to you, but trust me on this. This kind of gives me an equivalent to what delta does. So I want to make sure that my deltas are not more than 0.05 times, no, 0.15 times the amount of my net lick. Some of you didn't know what net lick is. Net lick is my account value. So if you look today, my net lick is $26,182. So I want to make sure that in looking at my deltas, I'm not too directionally long. So what I do is I take 0.15 times my net lick of 26, whatever. What was it? 26. Net lick is 26,180 times 26,180. Shannon, you got your little calculator there. What's 0.15 times 26,180?
39.27.
You said 39.27? 39.27. Okay. So my goal in my account is make sure that my deltas are not more than 39. So my current deltas are 12.30. So I'm fine. So let's go look at that on my spreadsheet. So I would go in today and record my SPY weighted deltas. They are 12.26. So let's put them in. SPY weighted deltas today are 12.26. And sure enough, I have something that it turns green because my spreadsheet automatically does the calculation for me. My conservative deltas, I don't want to be more than 39 deltas. I have 12 deltas. So when I look at this, I go, yay, I'm not going too fast. If I had 40 deltas, I'm a little too fast. If I had 45 deltas, I'm going faster. If I had 80 deltas, I'm really, really going fast. But I have 12 deltas. I'm comfortable with that directional risk. Shannon, is my portfolio bullish or bearish based on the deltas that I have?
Bullish.
Yes. You and Isabel sound so timid. Don't be timid. I want you to sit there and go, bullish, by gosh, you fat, black, glaring, weird bastard, you know, just throw it out there. All right? Never be shy. If you're going to be wrong with passion. Okay? All right, so my deltas are 12.26. So, Isabel, if SPY goes up 1 point, how much should I make in profit?
$12.26.
Yes, look at y'all. Isn't this great? You guys have got this. So that's my speed. That's my speedometer, so to speak. Now, let's look at theta. Theta is the fuel that supplies my engine. When you sell an option, you collect something called theta. And theta is the time value of an option. So if I sell an option and have theta, that means as time goes on, I have $11.84 in theta. What this means, Isabel, is if all things equal, every day goes past and if the market were to stay the same, I should make $11.85 every day based on theta. It's kind of like this. When you sell an option, I equate it to, what do the kids do with my pen? I equate it to me selling an apple that I don't own. So let's say that I don't own an apple. So I'm going to sell you an apple, Isabel, that I don't own. What's wrong with this thing? Hold on. I'm on the wrong thing. Hold on. I'm going to have to draw with my mouse. Give me 1 second. Why is that thing missing? Anyway, I'll draw with my mouse. Say it's an apple. And Isabel, pretend this is an option, but we're going to call it an apple. And I sell you an apple for $1. And you give me $1 for the apple. Okay. As the seller of that option, I am obligated, unless this thing expires, to buy it back from you. So what happens is day after day, this apple rots and it withers away and it gets smaller and smaller and smaller and smaller. And eventually, all I buy back from you is the core. And say, you know, at the last day, it may be worth a penny before it ultimately expires. So every day that this option goes on, it goes down less and less. That is as it rots, that is the theta or the money going into my little account. I collect it every day. And I want it to expire when I sell it to you, or I'm going to have to buy it back, the apple, and I want it to have decayed. There's only one problem. If I sell a put at a 10 delta or a 10% probability in the money, and all of a sudden the market crashes, this option that was the size of an apple is now the size of a watermelon. Crap. the market went against me. This watermelon now, I am now obligated to get this thing back. And instead of me paying $1 or a penny to get my option back that I sold, now I may have to pay $10. Jeez. So if I sold this for $1 and I buy it back for 10, I have lost $9. So theta is the erosion, the decay of the option that normally takes place and comes back into my account. Under normal circumstances, that's what happens. So what we see here is that we have $11.61 in theta. Shannon, if everything goes right today, how much money should I make in theta today?
$11.
And 68
something
cents.
cents.
Yeah, or say it
Yeah.
changes, right? Right. But yeah, that's the amount I should make every day. So my goal is to put enough theta into my tank so that I can make a sizable return. However, you can have too much theta. Theta not only is the fuel in my tank, but it's also a measure of risk. So I can't just sell 1,000,000 options and collect $100,000 of theta in a $26,000 account. I will be taking on too much risk. So what I've developed are some guidelines for theta as well. So theta is the fuel upon which our portfolio runs. My primary goal is to maintain a minimum theta of 0.001 times my net liquidation value. So if my account is $25,000, how much theta do I need in the account? 25,000 times 0.1 is $25. Everybody with me? So I have minimum theta guidelines and I have maximum theta guidelines. As risk goes up or as VIX goes up, as volatility goes up, I'm willing to take more risk. I always want to keep a minimum of 0.10% of my account in theta. But the more that volatility goes up, the more that I'm willing to take. So now we just looked at the VIX and volatility is between 15 and 20. So I want to have a minimum theta, minimum fuel in the account of 0.10, but a maximum theta of 0.2. So 0.2 times 25,000 would be 50. So I'm looking for my theta to be between 25 and 50. If volatility increases, I could go up to 75, I could go up to 100, I could go up to 125. But in today's environment where volatility is, I only want a maximum of, say, 50 in that account. Any questions about theta? Theta is that beautiful fuel that you and I, as option sellers, collect. Theta is also an enemy to the person who buys options. If you buy an option for $1, you're hoping that it swells up to the size of a watermelon, right? You want it to get huge. You want it to get big. But every day, the decay happens against your little option. Now, we could go into extrinsic value, intrinsic value. At this point, that's probably a little much. I just want you to kind of know options decay. Options eventually decay, and the extrinsic value of that option goes to 0. Juwan, you were going to ask something.
Yes. Hi. Hello.
Hey.
So 2 questions.
Yes.
One, this is more specifically options related, maybe
Yes.
not necessarily with beta, but has to do with the taxation of options.
Uh-huh.
Can you speak a little bit on, as you're doing options transaction, not auctions transaction, but options, can you just speak a little bit on how that reflects from a kind of tax perspective, just to be prepared? Because the gains and things are all nice, but at the end of the day, you still got to pay some kind of
One, you're going to love this. What we're doing with this new portfolio is I'm actually trading this in a Roth IRA. So what are my tax implications? Nothing today, right? only have to pay taxes when we take it out of the Roth IRA. Now, let's pretend that you're doing this in a margin account. There are things, okay, there's two secrets to the wealthy. Let me give you two secrets of the wealthy. If you are a real estate person, and we'll talk about real estate one day. I don't know why my darn thing is messed up. Why I'm on the wrong thing.
Hey,
Hold on.
Bobby,
Yeah,
actually, you don't have to pay taxes on money taken out of a Roth IRA.
I don't have to pay taxes on money taken out of a Roth. Oh, what do you mean? Oh, yeah, I've already paid the taxes. That's exactly right.
Right.
I've got it backwards. In an IRA, I have to take, on an IRA, I have to pay those, not in a Roth IRA. Roth IRA, I've already paid the taxes. You're right. So there's no consequence to a Roth IRA. Sorry, I got that mixed up, y'all. All right, what was I saying? Give me 1 second here. And who said that, by the way? I appreciate you coming in with that. That's exactly right. Huey on. Give me 1 second. Yes, the Roth IRA, we don't have to pay taxes. Give me 1 second here. Press Q, digital pen, working area. Working area is here. So that's even beautiful. Yeah, no taxes on Roth IRA because I will have already paid the money, taxes on the money going into it. So all this money that I'll be making here is going to be tax-free. All right, here's what I want you to know. Guys, the secrets of the wealthy. You ready? In real estate, one of the secrets of the wealthy, and we'll cover this, is a 1031 tax deferred exchange. Everyone's heard of a 1031, right? In options trading, we have this little thing called a 1256, all these IRS numbers and regulation numbers and stuff, right? So we won't talk about the 1031 tax deferred exchange today in real estate, but we will talk about 1256 in options. The reason that I trade futures and the reason that I trade SPX and the E-mini S&P 500 futures and the micro E-mini futures, and I used to trade wheat and soybeans and gold and natural gas and crude oil, all those wonderful things, is because these things are taxed as 60% long-term capital gain and 40% ordinary income. Isabel, which one's normally lower? Ordinary income or long-term capital gains tax?
Ordinary income.
Ordinary income is usually higher than the long-term capital gains tax. Now, y'all be really, really quiet, okay? Because this is stuff that only people like Nancy Pelosi knows, who's one of the greatest traders on the planet. She knows all this stuff. Long-term capital gains are normally lower. And what about this? Let's say that I sell an option today for $1. And let's say that tomorrow I buy it back for 50 cents. Right? I made 50 cents times 100, right? Because an option contract, it's 100 shares of stock. I made, what's 100 times 50? Times 50 cents. Anybody? Bueller, $50, right? I made $50. How many days did it take me to make it? 1. That normally is taxed as, someone say it with me, ordinary income. No, 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 no. Not in the futures world. In the futures world, even though I did not hold it for a year and a day to get long-term capital gains treatment, 60% of my $50 is treated as a long-term capital gains. How about that? 40%, only 40% is treated as a ordinary income. Now, what if I do
Bobby,
that? Yeah.
this is Katie. Does the wash rule apply here?
No, not on futures.
Okay.
That's what I like about futures, y'all. Now, what is a wash rule, y'all? That is, Congress put this into place because a wash rule means if I sell out of something and then get back in it, within 30 days, they're thinking that I'm trying to avoid taxes, and so it triggers this wash rule. Wash rules do not apply to futures. It just doesn't apply. Now, what else is something that does not apply to futures? Have you guys heard of the pattern day trader rule? Pattern day trader means that you can only get in and out of a position so many times within a certain number of days, or they label you a pattern day trader and you get in all kind of trouble and all this. It doesn't apply with futures. We don't have to worry with anything of that. So I don't have to have a minimum of $25,000 in my account to trade the futures. I can get in and out as many times as I want to. I don't have to worry about wash sales. I don't have to worry about pattern day trader rules. I don't have to worry about any of that garbage. That's why I like futures. I love futures. So it is the secret of the wealthy, y'all. You now know two secrets: 1031 tax deferred exchange for real estate, and for stocks, it's the 1256. These are little bitty sections that will make people wealthy. It really will. And very few people know about either one of these. Juwan, did I answer your question?
Yeah, no, that was great. Thank you so much. And then my second question has to do with just overall in general of the purchasing of any kind of security. So I know that each security obviously has a market value that it is trading at, or how much one share goes for. If you do not have, like, let's say, for example, if something is $100 per share, and you are only looking to invest $50 and you still are interested in that specific investment, do you have the ability to then still utilize that $50, but you're only purchasing half a share?
This is a great question for those of you who I have told you to put in to the S&P 500 and hold it until the rest of your life, right? I've told you that it's easy to do. So Juan brings up a great question. And it has to do with about fractional shares. So as far as I know, nobody will allow you to buy fractional shares of SPY. You know, I don't think that you can do that. You can check with your broker to make sure. But here's how oh, y'all do good. Here's how we do it with my daughter. Let me show you what we do with my daughter. So my daughter has a Vanguard fund, right? And so she buys the Vanguard VOO, which is their, ETF for the S&P 500. And so Vanguard allows us, and I'm not sure even what the cost of VOO is. Let's look and see if we can get a quote on VOO. VOO is at, $366, right? So here's what we do. I mean, she can put in as little as $10, and they will let her buy a fractional share of VOO. So check with the broker that you're with and everything, but there are ways certainly that you can buy VOO. For example, you remember when Collins, what was his name? VTSAX, you remember he was talking about that? Some of you said, yeah, that's good, but it had a minimum buy-in. What was the minimum buy-in for VTSAX? Do y'all remember? It was a couple thousand or so, wasn't it?
Yeah, and it depended on your share class, because you could get the Admiral shares for, like, you had to have 10,000.
Yeah. So, screw that, right? You're sitting there going, man, that means I can only buy it, every time I get 10,000. No, find something like VOO or somewhere that'll let you get into the S&P 500 in fractional shares. Great question, Juwan. Great question.
Hey, Bobby and Juwan, when I know we do VOO, and I'm pretty sure we just buy, but there's a heavier commission on doing those fractional shares, because our firm has to pick up those and trust that you're still going to continue to buy. So it's a heavier commission.
Okay, good. That's good to know too, right? So check on those things, because you do want to make sure that the fees are low, whatever you're doing. Katie's been too busy ripping her son. I mean, taking money from her son, that she's no longer with us on video today. I'm just picking at you, you know that. Katie, you still there? All right. So let's get back to where we were.
Here, I'm eating. Sorry.
Okay, no big deal. So Theta, this is gas in my tank, right? If all goes right, I should make $11.88 today. If SPY goes up, I should make $12.59 today. So theta in the tank. So I got $11.97. Let's put that in the tank. $11.97. And old Bobby here has got his little spreadsheet that says crap, it's blue. Ice means it's cold. I don't have enough theta in here. Now, if I had theta of 30, my little thing turns green and it says, hey, little Bob, you've got the minimum amount that you need, the 0.1, right? But I don't have that much now. Okay, so we've got our odometer, we've got our fuel gauge, and I guess our buying power usage is isn't that thing called a tachometer or whatever, the thing that shows, you know, rah, your engine's revving up too much. So this is the amount of collateral that my broker requires for me to be able to sell these options. So with futures, guys, there's something that's a little dangerous, and it's called span margin. Now, don't get me on this. This is the only way I know to explain it. So let's say you're single and you're sitting at the bar and you look over there at that temptress sitting on the other end and you go, oh my God, she be looking hot, but there's something about it. She gonna get me in trouble. I know if I go over there and sit beside her and buy her a martini, that old Bob's gonna get in trouble. I need to flee away from her because she looks good from a distance. But whoa, here she comes. Watch out, boys. She'll chew you up. She's a man eater. She gonna do bad things. I just know it. That's what span margin is. Span margin is so beautiful, y'all. And what it means is this. It doesn't take a lot of margin for me to sell futures. Span margin is associated with futures contracts like the E-mini, like SP 500. So there's another margin that's normally used in accounts called Reg T margin. Reg T margin is more like, oh, I see, yep, she's not going to be as dangerous. She's more approachable. Reg T is going to take more initially, but it's not going to blow up on me at the end. Reg T is kind of level, baby. Now, if you've gotten a portfolio that's above, what is it, y'all? I guess it's different at different places, but if you've got a portfolio that's above, what, 125, 150,000 or more, you can get something that's called what? Portfolio margin. And this means that they will take less, you know, the more money you have, the more benefits you get. Portfolio margin allows you to not put up as much capital in order to make the trades. But with span margin, that goes with futures. So let me show you the difference, okay? So if I were to trade SPY, SPY would be subject to, in this account, to Reg T margining. So if I were to trade SPY, and let's just say we want to sell a put. So we got 7 days and we're going to sell a put in SPY. So we go to the 30 delta, $2.40, right? They're going to charge me $7,417 to put on a SPY. Wow. Everybody see that? That's the collateral they're saying. They're saying, hey, bud, what if you lose on this trade? Well, we believe you could lose as much as $7,417. So we're going to do that. Now, watch this. Here's where the old temptress gets you in trouble, sitting at the old bar over there, drinking a dry martini. So now I'm going to go to a product that is 5 times the size of SPY. It's bigger than SPY. And I'm going to trade the E-mini futures. Okay. So I put that in and I say, well, let's go sell a 30 delta. It's 5 times bigger. You would think they would charge me $35,000 in margin to put this up, right? Let's go down to the 30 delta. Let's sell this here. And they're only charging me. Now, keep in mind, y'all, this thing is what? 5 times the size of SPY. But I'm only 5 times bigger, but they're only charging me $10,000 in margin. the margining on a much larger product is so much less. And then if I go to something that is 1/10 the size of the E-minis, this is called the micro E-mini. Hold on, the micro E-mini, and I want to go out 7 days and sell something. Hold on, let me get it. Come on, Bob. Come on, Bob. What's wrong, my darn? What's wrong, my darn? Here we go. So this is 1/10 the size of the E-mini. This is a micro. I go out here and I sell this. They're only going to charge me $980. This is a little thing called span margin. Okay. So how much buying power am I using in my account? I am using $4,398. That is the collateral out of my $26,000 account that the broker is requiring me to put up. So let's put that in the spreadsheet, 4,400. Okay, is my engine revved too high? No, because I go back to my trading plan, and my trading plan says buying power ensures the portfolio's overall position sizing is not too large and that the portfolio is not taking excessive risk. If the VIX is between 15 and 20, I can use 30% of my net liquidating value or my account value. If VIX goes up, when volatility is more, y'all, take more risk. When things are volatile, that's when you jump in and take more risk. That is contrary to what most people do. If you see a burning building, most people don't run into the burning building. We as option sellers go, wait a minute. Those options are puffed up in price. It's the perfect time to go into the building. So now VIX is between 15 and 20, so I can use a maximum of 30% of my account value. We go back to my spreadsheet. I put in the buying power that I'm using, and I'm only using 16.8. So as I look at my speedometer, my fuel gauge, and my tachometer, I see that everything is green except for my theta. I am about on empty. I need more fuel in the tank. So what do? This tells me to put on a trade. Really, for my trading plan, and if you are a trader, you need a trading plan. You're welcome to look at mine and make it your own, but I have a trading plan that tells me what to do. So if I don't have enough gas in the tank and everything else is in acceptable ranges, I am required by my trading plan to put in a trade. So what I do is I go in and do what is called a 1-1-2 trade. Now, we got 16 minutes. Let's see if I can explain this as best that I can. I trade in this product, the /MES, just like we've got here, /MES. It is the micro E-mini. Jawan, does this have 1256 tax implications?
No.
Yes.
Oh.
It is a future. And what does that mean, Juan, that it's got 1256 tax implications?
Oh, yeah, I think at 1256 tax implications, that is the 60-40 split, where 60%
That's right.
of the
Discount.
Yep, it will be taxed as long-term capital gains, which is 20%, and then the other 40% is going to be taxed according to your ordinary income tax bracket.
But of course, that doesn't apply to this account. Why does it not apply to this account, Isabel?
I don't know.
Yes, you do. What kind of account am I trading in?
A futures account?
A Roth IRA.
Oh,
So screw Uncle Sam. We don't care what he says about it. We don't care what the tax things is, right? I'm going to get my money
Tax-free.
tax-free. Yeah, I'm going to get it tax-free because I've already paid the tax on the money going into the account. Okay.
but don't you have to pay taxes on the money that you make?
No. Isabel, if you'll follow this, if you'll follow me, we're going to change your future. You hear me? We're gonna make big differences in y'all's lives here. We're talking about stuff, y'all, that I'm telling you, I don't know who besides Nancy Pelosi knows this stuff. There's not a lot. We're telling you the deep secret stuff here. We're telling you the stuff you're never going to learn in college. We're telling you the stuff you're never going to learn out on the street. We're telling you how to do it and not pay taxes legally. Okay. So all you got to do is do like I've done, and you're up 10% on the year when the S&P is up only 3%. All right. So let's get excited. Now, I hate to tell you this, but I'm going to show you what the trade looks like in one brokerage because I like the way that it looks. And then I'm going to actually put the trade on in another brokerage account. Okay. So I go into the MES. And my trading plan says I need to go to at least 60 days out, closest to 60 without going under. Now, gosh, Pete, how do I explain this? I am going to buy a put debit spread. Put debit spread. It's also called a long put vertical. Let's show you what it looks like. And it's 50 points wide. Man, I wish someone would have told me this when I was y'all's age. Now, I'm going to move this down. This one's at $16.75. I like moving it down to where it's $10, and I'll show you what it looks like. So I moved my strikes down until I get down to this thing to being about $10. 50 points wide, $10. And let's look at it when we get down there. There's $13. Let's move this short. It's a short put and a long put. The long put is closer to the money. Keep on going down, Bob. I'm so excited for y'all. God, I wish someone would have showed me this when I was y'all's age. I would have retired before I was 51. All right, so there's 1075. Let's move it down a little bit more. 3770, 3820, 1050. Let's try 3750, 3800. This is a put debit spread. Okay, there it is for $10. All right. I am buying a 3800 put. I am selling a 3750 put. It is going to cost me $10, but the multiplier, $10, but the multiplier for micros is 5. So it's going to cost me $50. Anytime that you are paying a debit for options, your max loss is equal to the amount of money that you spend on it. So if I buy this thing, I can only lose $50. My max profit is the width of the spreads, which is 50 times 5 is 250, minus the debit that it took for me to pay for it, which is $50. So my max profit is $200. You're not going to get to all of this at the same time. You're not, some of this stuff you're going to have to watch time and time again, but it'll make a difference. Trust me. So it's 50 points wide. This is a put debit spread. I'm buying something closer to the money and I am selling something farther away from the money. My risk is defined. My risk is the amount that I pay for this. I cannot lose more than 50. I can only make $200. It has a negative delta. Shannon, it has a negative delta. Does that mean this is a bearish or a bullish trade?
Oh,
I appreciate your enthusiasm. However,
I'm wrong.
you meant to say bear. I could see it on the tip of your tongue. I really could. It's negative delta, so it's a bearish trade. Now, this particular trade has a negative theta. But let's see if we can look and see what this trade looks like. Where does this trade make money? So let's go to the curve. Let's go to the analysis. Let's take everything off except for this trade.
Really quick question, Dr. Gaines.
Oh, absolutely, Juwan.
For even though it's a negative delta,
Mhm.
but because the negative delta is so small that it would almost still relatively track whatever index it's benchmarking, would this, is there like different extremes to being either bullish or bearish, or in like the grand scheme of things, could this specific one be considered neutral because of how close it is to zero?
Actually, with this trade, Juwan, I use it in combination with something else. So
Okay.
it's actually this trade plus another trade. But what I want to do is break this trade into the components so that you can kind of see the individual components, and then we'll see how the whole thing works together.
Gotcha.
Okay.
Thank you.
So, guys, this is the risk profile. Let's make sure you guys can see what's going on here. So this trade, here's where the market currently is, right? We're at 39.93. If price stays here for the next 73 days, or goes down to 39.80 or here, I'm going to lose how much? $50. See, the max loss here is constant, regardless of how far the market goes up. Remember, I told you I can only lose $50 on the trade. But look what happens if you think that we're in a bear market. Hello, ladies, what is going on? After we start going down past this 3,800, something interesting happens. This line is the T0 line. That is time today. The rigid lines like this is expiration line, right? So if we go down, all of a sudden, I have an ability to make $200 if the option, or if the price goes down into this area at expiration. So does everybody kind of see how the risk graph looks? It's a great risk graph. Now watch, that's the most that I can make. If it goes to zero, if the price of the S&P 500 goes down to zero, it doesn't matter. The max profit is the max profit. Write this down. We increase our probability of success by defining our max profit. We increase our probability of success by defining our max profit. Okay. Now let's go back to the table to do the second part of the trade. So you see, this is a bearish trade, but then I do something else, guys. What I do then is this is called a 112. Ed, I wonder if I should, is Ed in here? I wonder if I should do a 111 to make it simpler for them. I'm trying to make it as simple as possible.
You could probably do a 111. It would be easier.
Yeah, I think it would be.
Stuff. This is the stuff that people hang around in Bobby's Discord for months before they figure out. So
this is very high-end stuff, y'all.
So don't feel bad if your headache is like busting your eyeballs out of your head right now.
Yeah. So everybody, I want you to chill, right? I want you to act like you're on laughing gas like I was yesterday getting my wisdom teeth out. I want y'all to just enjoy the ride. All right. So what I try to do, I bought that for $10. So I'm going to try to sell something for $20. Okay, well, we could go to the 35.40 and sell that for $20. So I click on the bid for sale. Now we've got something that's a little strange, right? Now I've got a put debit spread, and I go way farther down in the money to a 10% probability of being in the money, 10 delta, and I sell something for twice the amount of the debit that I paid, so that overall I'm going to collect $10, or roughly $10. Here it says I'm going to get $10.75. Now what we've done is my maximum profit is defined. This is why a lot of the ignorant people buy options, because their max profit is not defined. However, they have maybe less than a 50-50 chance of making money. You and I have a 95% probability of profit by doing this trade. Our max profit is $305. Our extrinsic value is 55. That means that's the amount of credit that we received today. 5 times the price of the credit, we'll get $55 today. Our max loss, though, guys, listen, is $17,396. Hell, I'm not doing this trade. I could lose $17,396. Jawan, What would it take for me to lose $17,396? It would take the S&P going to what?
0.
0. Is that going to happen? No. Now, remember the old span margin sitting at the end of the bar? Oh, here she get ready to chew you up. Look, they're only going to charge me $419 to put up as collateral for this trade, even though I could lose 17,000. Isn't that amazing? So it's going to cost me $419 in buying power to put on this trade. Okay, let's see what the combined trade looks like. Guys, this is a thing of beauty and a 95% probability of success. Look at this. I collect $55 for the entire trade. I don't care if the market goes up 10 million points. My profit is defined. Shannon, why have I defined my profit? What did you just write down? I have defined my profit because
So you can increase your success.
because I have now increased my success to 95%. If you could go to the blackjack table knowing that you have a 95% of winning every hand, how often would you play? All day long. Now check this out, Jawan, you're going to love it, right? I don't care how far the market goes up, I get to keep my $55. I don't care if the market goes down $50. At expiration, I'm going to keep my $50. I don't care if it goes down 100 points because I'm going to keep my $50. I don't care if it goes 150 points down. I'm going to keep my 100. I don't care if it goes down 200 points. I'm going to keep my $50. If it goes down 250, at expiration, how much money am I going to make? $303, $305. Everyone see that? If it expires here. Now, if it does it today, remember the orange line is the T0 line, which represents my profit today. If it did it immediately after I put the trade on, I'm losing $5,200, but I really don't care because at expiration, I will have made $305. Look at this, guys. I don't care if the market goes down, what, 300 points? I'm down $101 today, but if I can just hold in there for 73 days, I'm going to make $305. Same thing here. Look, I don't care if the market goes all the way down here to about 35.40. If it stays there within 73 days, I make $305. My break even, where I begin to lose, is way down here at the 34.80. 34.80 is how many away from 4,000, y'all, where we're at now? 500 and what, 20? 520 points, and I still make money. Now, if it happens today, let me see what that is. I'm down $482. But if I hang there to expiration, I'm still going to make $375. Ladies and gentlemen, Ed says that's 12% down. A 12% drop in the market, I don't care because I'm still going to make money as long as it hangs in here somewhere in the next 73 days. And I've got a 95% probability of profit. And when I make that profit, it's in a Roth IRA, so I'm never going to pay that to the federal government. I equate it to this. We have legally robbed a bank. You and I have walked into Regions Bank in Birmingham, Alabama at the Harbert Plaza. We have gone in there. We said, fill our bag up with money. We don't even need a gun because it's legal. They fill up our bag and we walk out with our $50 to $305 with a 95% probability that we're going to keep it. Now do you see why Bobby is up 9% on the year? Whereas the market is up 3%. But y'all, as Dr. Jim would say, and y'all don't know Dr. Jim yet, but for every gimme, there's a gotcha. Why doesn't everybody load up the old bag and go into Regions and rob Regions? It's because of this. They fear this. But Bobby, if the market goes down to 3,300, I just lost $1,024. But Bobby, if the market goes down to 3,050, I just lost $2,000. If the market goes down to 2,500, I just lost $5,000. That's why people don't do it. But it is because of the fear that these people have that make these options juicy for us to sell. We go where no man has gone before, and we do it boldly because we put the probabilities in our favor. Questions? Yeah, Paul, keep an eye on the lady at the end of the bar. Just like I said, it could be trouble. When the price goes down that far, margin's going to expand. So you were using 10% of your buying power. Now that margin goes up, you're using 90% of your buying power. What do you do? What do you do? And that's what me and the 744 people that are in my Discord group study every day. How do we do this? Rob the bank legally, never pay taxes, and keep it and minimize the risk to the downside. This is what takes us years to study. What I have gone through, ladies and gentlemen, is the result of a lot of hard work by a lot of people who I am one of the least of, but we come up with this strategy, and then we come up with strategies to hedge our risk to the downside. Thus, we operate our own hedge fund, and you can operate yours as well. Now, there's much more to cover on the strategy, but I just wanted to give you a bird's eye view of what we do each and every day. And you never have to do this. You can buy the S&P 500 and sit on it for the rest of your life. However, for those of you who are a little more adventurous, those of you who are like a Karen, who go, I want to study this stuff. I want to increase my odds of success, and I want to create great wealth. There is a whole other world that is open and available to you if you so choose to study it. Questions? Juwan, are you excited, or do you say, screw this stuff, I'll never do this?
I can say this is intriguing, very intriguing.
Shannon, what are you doing? Are you just like, the heck with this?
I have completely checked out, and I am completely opposite of dear Juwan. This is not intriguing. I want to cry.
You want to cry? I got you. Isabel, how you feeling?
I'm ready. I got my Fidelity account open.
Mm-hmm.
I just need some assistance.
Isabel, what I want you to do is I want you to maybe paper trade it first. I want you to feel it. You got to feel it. So that
No,
when
I'm just ready. I'm all in. I'm ready to go.
I got you. Now keep in mind, most people who start lose, right?
It's fine.
But if you'll consider it as tuition, you're paying tuition at the School of Hard Knocks and Learning. But ladies and gentlemen, I'm telling you this. If you can do some of these type things, and you ain't got to do my plan at all, right? But I made 208%, not with this strategy, but doing something else in 2020. You can have a market opinion. When you hear that a calamity is coming, you can set things up so that you can profit wildly from it. Is Katie still with us? Katie's probably, I bet she's checked out too. I don't know. I don't know if this is Katie's stuff or not.
I'm here.
Hey, Katie. Katie, is this your stuff, or is this not your stuff?
So right now it's not.
It's
But
not.
I think it's because I know that, I've got big plans for CFP and all these other things, and I've got little kids at home. But once I get done with that, I'm going to have time on my hands to study something that's going to have to fill the gap of what I've been doing for the past few years. And I really do think that if I don't at least try my hand at this, I may regret it in about 10 years.
Well, here's the cool thing. The easiest thing for me to do, why am I showing you this? When we covered Collins and we covered Bogle, who just say, put it in an ETF, you know, track the S&P 500 or the overall market and let it ride. Time is your friend. Time is your greatest asset. Some of you want to do something else like this. And you know how to create wealth. It is incredibly simple. It's just not easy. You've got to use time. If you have a job that has a 401k and they're matching it, you must contribute today, not tomorrow, not the next day. You must do it today. I want you to stop your work and I want you to contribute the full amount that you get a match. That's 100% return. You must do it today. You cannot wait till tomorrow. Your biggest asset on this earth is your time. We are all born to die. We're going to die. You have time. You must put time on your side. Yes. Was that John? Who's that?
That was me, Bobby.
Hey,
It's
yes.
Tony.
Hey,
I'm going to say, you know, there's numerous avenues to be contributing money to retirement plans, you know, including that Roth IRA you talked about.
Yeah.
As well as your 401k, or if you're a small business, you're using like a simple IRA maybe, or a SEP IRA. But I have 3 different accounts going all at once, and I contribute the max every single payday.
Tony, you make me want to cry. I love that.
You got to get the money in those retirement plans so you can defer that, you know, or eliminate those taxes completely.
Y'all, I know the student loan payments coming due, but you got to do that. You got to do this. You've got to get your money in and working for you. The market was down 16% last year, it was down 20%. You have got to get in. Time is your friend, please. If I could take every one of you and look over your 401ks or your IRAs and set you up, I would, if I had the time to do it. But I'm begging you, I'm imploring you, use your valuable asset of time. Do it today. Don't wait till I finish school. Don't wait till I get that other job. You've got to do it today.
Hey, Bobby, can I say one more thing?
Yes, absolutely.
I know that you and I are probably similar aged, you know, these young
But we
people
look much younger, Tony. We look much younger.
Yes, exactly. Some of these young people are on this call. I mean, guys, if Bobby and I did what you did, I'd be worth $100 million right now if I was doing this when I was your age. You know, so you just got to have faith that you just save that money, you put it to work, you get your compound interest working, and then, you know, it'll happen for you. I mean, I'm saving like, I'm sitting at about $70,000 or $80,000 a year right now is going into my retirement plans. And I know some people may not make as much money as that, you know, enough to put that in there, but you just gotta put as much as you possibly can.
Absolutely. Do it today, y'all. Yes, Juwan.
And some of,
No, Katie, go ahead.
sorry, I can't see everything because I'm on my phone, but I was gonna say, some of you, if you're going into finance, you may not be at a point where you're able to contribute to a Roth if you make too much money. So if you have the availability to do it before you can't anymore, because that'll only tick you off when you can't.
Actually, Katie, you can do a backdoor Roth IRA. You can.
Oh yeah, I knew to do a backdoor, but just that simple, the feeling of what it is when you first start and then you realize there's more taxes involved. Yeah, I'm aware of the backdoor.
I was just gonna really quickly say, I know Dr. Gaines, you mentioned something about, you know, paying the student loans. So one of the provisions that has recently passed with the Secure 2.0 is that if you are paying your student loans, and that is a part of the reason why you aren't contributing to your employer-sponsored retirement plan, of course, check with your employer, but your employer actually has the ability to match whatever up to what, if they offer a match up to whatever their match is with your student loan payment. So let's say you put, you know, $500 and they match a total of 3% of your salary. They will match that 3% as if you were contributing to your 401k, but you're paying into your student loans and they are putting that same amount into your retirement account up to what they match. So that's something that went into effect the 1st of January after President Biden signed Secure 2.0. So definitely you guys check your account or check your employers if that's something that you do.
Awesome. Thank you, Juwan. Yeah, Isabel.
So my question is, let's say I inherited $30,000.
Yes.
I wanted to put it into a Fidelity account that I just opened. if for some reason 10 years down the road, I needed that money back, could I withdraw that money?
From what kind of account?
From like one of these Fidelity accounts that I put it into?
But I mean, is it a Roth IRA or is it just a regular margin account? What is it? I mean,
I don't know. Whatever. I've got two accounts right now. One says it's a rollover IRA.
mhm.
Oh, sorry, I have three accounts. The other one is a 401k stock purchasing plan that I earned when I was working with Frost. And then another account is my 401k plan for my employer now.
Yeah, if it were a Roth IRA, I think a Roth IRA, y'all correct me if I'm wrong on this, I think you can take out what you contributed to a Roth IRA without penalty after, what is it, 5 years or so?
After 5 years, you can take
Yeah,
out the principal. You can't touch the interest
You can't touch any of the earnings that
until
you
you're
got.
59 and a half.
Yeah, but you can take out what you put into it. If you're taking something out of an IRA and you're not at the minimum withdrawal age, then you'd be subject to penalty there. And of course, if it's just a regular account, non-retirement account, you can take that money out anywhere. What are you wanting to do with this account, Isabel? You wanting to do options, or are you putting this in the SP 500? What do you want to do?
To be honest, Bobby, this money I've just been letting it sit there for 4 years. I've got no idea what to do with it. So if I lose it, I don't care. This is money that I can just play with right now.
Okay.
I didn't even know I had it.
Well, then here's what I'd say. First of all, right? If you've got student loans, my God, get rid of those. I think that would be, the number one thing is make sure that no credit card debt that's working against you. If you've got, something that's at 20 or 30%, God knows what the interest rate is on credit card, get rid of that.
No,
Use it to
I
get
have
rid of
no,
it.
I don't have any debt. I've got student loans, but it's very minimal and I can pay those off.
Okay, then if you want money to work for you, it depends. If you want to go the Bogle Collins route, or if you're wanting to do something a little more aggressive, then why don't we talk about that? We'll talk about that
Okay.
offline. Me and you schedule a time. Let's get together and let's talk about what you want to do with that account. Seems like you've got options and there's things that you want to do with it. And if you're interested in this, let me know. And let me get you into my Discord group where we've got tons of smart people that have, it's a great learning environment. And for any of my Alabama students that want to be in there with these people, let me know so that I can get you in. We talk about T-bills, we talk about I-bonds, we talk about, stocks and trading and options and all kinds of stuff. But yeah, we'll talk offline about that.
Okay.
Any other questions or comments? I want you to get excited about this stuff, y'all. This is cool stuff. Evan.
Yeah, I'll keep it quick because Ed's got his class going, or he will soon. Just wanted to say that offer for all of you to get into his Discord room is something that you should definitely take him up on. It doesn't sound like there's going to be any commitment or requirements, so I would at least come in and check it out and kind of pick the brains of a lot of the people in there, because there's some really good conversations for sure. And knowledge is power, so that's free information. I would take them up on that. And two, I think Glenn brought up an interesting point. It sounds like it was an inherited IRA. So I'm assuming that money is in there now, because you said it's been in there for 4 years. So if it's an inherited IRA, it's going to be different than, say, a normal brokerage account. So you might get stuck not being able to pull that money out for a number of years. But the part that he touched on was you're going to have to start taking required minimum distributions based on the age of the person that died at some point. So you're essentially going to be forced to withdraw money from that account. And when you are, the taxes will come out of that money, but that money will go into your own personal bank account. So that money at some point in your life is going to slowly start to come out of that IRA. But it sounds like for right now, it's just kind of stuck sitting there like a normal retirement account, since that's how it was passed on to you.
Well, no, this wasn't, so the inherited money that I have is just sitting in a bank account right now. That wasn't an IRA.
Okay.
These accounts that I've had in my Fidelity account were, one of them was a 401k that they had rolled over to a IRA because I had stopped working there. And then my other one was a 401k plan that I had just been putting money into because I had worked there for 4 years. And then I just couldn't contribute to it anymore. And
Okay,
then
so
the
then
other
that,
one
that
is-
money that you inherited is just gonna end up going into what's called a brokerage account or a regular margin account.
okay,
And then that just behaves like a bank account that you can trade stocks and options. So it's not something that you're getting roped into or trapped in. So fairly fairly easygoing account, I guess you could say. It's not like a retirement account where you have to wait until you're 60.
And Isabel, let me tell you this, you may want to stick around, and any of my Alabama students are welcome to stick around. Ed is about to do a presentation on T-bills, right? And if you got money just sitting there doing nothing, y'all, if you're not at least in a T-bill getting over 4% interest for nothing and no risk, you got to be doing that. So this exact same Zoom link will be used by Ed next. I'm going to shut this one down so I can get the recording of this, but you're welcome to hang around, come back into this Zoom link, same Zoom link, and listen to Ed's presentation on T-bills. You guys will learn a lot there too. Okay?
Hey, this is for Isabel really fast before you close up, Bobby.
Yeah. Hey, Tony.
When she puts her money in that brokerage account that's not tax deferred, that's where you were talking earlier about the 1256 contracts, the index options, stuff like that.
Yep.
That would be what she could be doing in there, which would reduce her tax burden, from the money she puts there,
Yeah.
from her inheritance.
Yeah. Good. All right. Great class, y'all. I hope your head is spinning a little bit. It's exciting stuff, y'all. And I wish I'd known this when I was y'all's age. Oh my gosh. If I was Isabel's age and Juan's age when I learned this stuff, and Katie and Shannon, oh my gosh, the world is open to you in so many ways that I hope that you are seeing. You may not appreciate it now, but I'm telling you, there's a great reward if you are able to study this and develop your craft. Okay. Great session, y'all. So keep in this link. I'll shut this one down and we'll start a new one. Okay. Bye, guys.